Ladies and gentlemen of the crypto space, we're live on a Friday, May 27th at 11:36 a.m. For the few, the proud, the remaining, excuse me, are persons that obviously listen to the narratives that I talk about, but also persons that have their own narratives and own understanding and motivations, goals, intentions, so on and so forth. And surely everyone that listens to me is of the rational community and is not buying Shiba Inu, Dogecoin, and shit like that. Yeah, we played around with some NFTs, but we never really expected to make any gains with that shit. It's art. You put that stuff on a wall. Um, the point of this stream is the fact that we're in austerity, a period of severe austerity. Now, the crypto space experienced this many times, and so does the equity markets, and so does the macro economy. It's a period of liquidity draining, and you could view it very obviously as emerging as an emerging market. Liquidity flows into and out of emerging markets, and you can see that from a crypto perspective via the stablecoin market caps. How much has been redeemed from Tether? How much has been withdrawn from USDC? How much has Frax deflated? And clearly, UST completely deflated. So that is a massive, massive, massive liquidity drain on the amount of circulating currency that is flowing through these systems, and that is velocity. Velocity is obviously the money creation process, but also is the churn of capital, the velocity, the flow of capital, and this contributes to either contracting or expanding business activity. Now, obviously, a good part of the crypto industry, these businesses, is speculation, but speculation, what does it do? It drives capital flow, drives cash flow. So, if we're looking at everything from a business standpoint, from a traditional macroeconomic standpoint, we're looking for the flow of cash for whatever reason. Obviously, in traditional finance and the real world, you're talking about the buying and selling of goods, commodities, consumer staples, so on and so forth. Now, in the crypto space, it's a derivative. There's businesses that have real world arms and real world type of products and services, file storage, maybe security, tokenization of VPN, and so on and so forth. And that is what's going to evolve and grow in the future. And clearly, the vast majority of crypto activity has been speculation. Thus, the vast majority of business activity that drives cash flow has been significantly, the majority of it has been neutered. And that is manifesting the market environment that we are interacting with today. That this does not invalidate in any regard the businesses that have emerged in the crypto space, but what it does is it highlights the nature of the vast majority of the crypto space being complete vaporware, which is exactly what happened in late 2018 and throughout 2019, when there's liquidity inflow. It's SPACs. Look at what's happening with SPACs. They were blowing up because they don't have a sound balance sheet and they can't refinance debt. They can't survive the liquidity contraction. It's the same exact thing. Everything in the crypto space has SPAC vibes. They've got capital raise, or they're issuing shares, they're diluting shares, and then the dilution of shares shares in many regards is the type of a currency, a form of a currency, because they could offer them either via options or whatever, and if you issue more shares and you either dilute your market your the amount of currency you have, so each share is worth less, but in other regards, from a balance sheet perspective, you're spending more than you're making in revenue. And that's like a dividend company paying more in dividends than they actually make in revenue. It's not sustainable. In fact, it's self destructive from a balance sheet perspective. So the same thing happens with tokenomics. Anything that is not cash flow positive in the crypto space is dead. There's no refinancing, there's no borrowing, there's no debt to increase the likelihood of survivability. It's dead. So if you're on an L2, if you're on Phantom and Avalanche and anything that has a business model based on incentives, 100% APY, 50% APY, and it's from inflation, it's going to die. So please do not have hope. Hope will get you nowhere. Any of these farms and auto compounders and aggregators, they will die, and their value of the token will go to zero, and you will lose everything. So evacuate anything and everything that does not have a positive cash flow business model, balance sheet specifically. Now, there is on mainnet, there are protocols that will survive that aren't cash flow positive. And frankly, done they venture capital the crap out of the company. So two perfect examples of that are DYDX. The the value of the token means nothing. It's a company, and it's been venture capital. Similarly, 1inch. Um, the value of the token's irrelevant. They've turned it into a business, and that's cool. And I expect that to be pretty much the base case for the next cycle when liquidity turns around in a year or two or whenever it happens. You can have a massive amount of venture capital. You're just going to have businesses, and there might be actually less opportunity from a token perspective. There'll be speculative opportunity because excess liquidity is just going to drive up the price of everything. That's what we've seen in every speculative mania. Everything just goes vertical. And we all very much look forward to a 2020 speculative mania again, and you can capitalize on pretty much anything. But we fall back to my base case, which is a business, which is the balance sheet. And we're able to distinguish between shit that just goes up and then stuff that actually goes up for a reason. And we've talked about the most meaningful characteristics and attributes of enterprise, whether it be traditional enterprise or crypto enterprise. They are identical. So what survives? What's stuff that survives is stuff that has positive cash flow. Now, there's stuff that's on the edge. Now, I'm very much intrigued. I would like Beethoven to survive because they're one of the few protocols that has built the federation. But obviously, Phantom is completely devastated. So I'm not interested in it from a capital allocation standpoint. The last thing anyone, period, should be thinking about capital allocation right now. You should be thinking about shit. Hope I carved out enough cash in stable coins or dollars in a bank account, what have you, to cover my bills and expenses. This is a serious, serious macroeconomic catastrophe that, with regard to directionality, better have enough cash, whether it's from income, from employment, or cash and savings that you carved out from our cycle, our our investment cycle, be it equities or crypto. Yeah, and you're going to be consuming your cash. You have to. That's the whole point of this. Now, if that wasn't really how big your perspective was, looking at the most previous cycle, 2020 to now, or really the end of 2021, next cycle, you really need to start thinking about that. It really is all about cash because that is what you use to pay for bills. And then we get into macro talk and, debt is serviced nominally, so inflation is completely irrelevant, so on and so forth. I'm not going to digress too much. But we have all these experiences that I hope gives everyone the education and guidance on how to do better in the next cycle. And that's why we're here. We can do better. Um, so this is not buying. Maybe if you get lucky or you just don't care and your risk tolerance is completely massive, you're buying. But what have I said? I've said many a times that I'd rather wait for the liquidity to return, find the bottom happens, and then it goes up, and then there's liquidity, and then, I'd rather buy after bottom because if you're trying to buy bottom, the odds of catching bottom are slim to none, and the odds of catching bottom, looking at technicals in the crypto space, is basically zero because this is a microscopic market in a massive, massive ocean. This is like a pond in pick one of the major oceans, the Atlantic. This is like a 50 foot by 50 foot pond in the Atlantic Ocean, if you want to put scale to it. So, what drives all this activity we see in the crypto space is liquidity. And we got to see the liquidity flow in to stablecoins. We got to see the liquidity get unfucked in the macro financial system. And it's completely draining from the equities markets. And the equities markets are like a 100 foot by 100 foot pond in the Atlantic Ocean. The equities markets are basically zero in the grand scheme of things in the amount of capital that's out there in leveraged dollars. So, one of the biggest things that I hope to have taught is that, sure, we can have our animosity towards the dollar, but it doesn't matter. It's all about the dollar. The dollar rules everything. And yeah, you can have your Bitcoin narrative that the dollar's inflating and the value is trending towards zero. But when you go to the fucking grocery store, you need your damn dollars to buy some groceries. So don't give me this, pick a phrase, this white knight, this uh, not egalitarian, but this holy mission of saving people from the dollar. No, you're not saving anyone from the dollar. The dollar's needed because you gotta pay bills. So don't mislead anyone, and the most important person to not mislead is yourself, please. So obviously, I'm going to answer all your questions. You guys are chatting away a little bit, but cash flow positive. Carve out your damn cash. I wish I carved out cash in November when the damn euro dollar curves inverted. Jeff Snyder nailed it as always. Um, and learn or identify the protocols that are going to survive. This is a period where the weakness is purged. The shit monetary policies are purged. And anything that remains becomes basically systemic infrastructure. And you guys know the protocols. I don't need to mention them. I talk about them on Twitter. I rarely talk about protocols on Twitter, but when I do, I talk about the ones that are probably going to survive. Now, probably the biggest thing on my radar right now, from an excitement meter, is what Sam from Frax is proposing to do with Curve. Now, that would be crazy, and that would entail that basically Frax becomes a primary currency of the digital space, and Curve is the facilitator that finances it or creates the pressure that facilitates self-sustaining um, uh, price point, the peg, and capital flow within the Frax economy. So Frax has a damn economy as well because of FXS. And it has capital flow. It's overwhelmingly cash flow positive because of the treasury that generates returns. So it's a cash flow positive business. Curve is overwhelmingly a cash flow positive business. Now, obviously, stuff like Uniswap, it's all cash flow positive because they don't fucking give away any money. Uniswap is the most worthless token of one of the most profitable businesses of the crypto space. It's just worthless. The token is useless. It's worthless. Doesn't belong in anyone's portfolio unless you're a business and you want to control the governance of Uniswap, which means we have, as capital allocators of a small fish, we have no business whatsoever owning any of that stuff. It doesn't have any purpose. And for us, our purpose is to access disintermediated cash flow, or the cash flow that these protocols have been designed to disintermediate, and that's wonderful. That is really the biggest emergence of what the crypto space offers compared to legacy finance. Whereas with stocks and equities, it's controlled by a board, share issuance, it's all centralized governance. You have absolutely no capacity to influence governance. But crypto, this is all grassroots and has, sure, there's voting and stocks have voting, but the protocols have rules, fixed rules, and there's no board. The governance has been disintermediated to a degree that cannot be done with a corporation, where it does not exist with corporations currently. Clearly, anyone could model anyone, but this is where the opportunity is to own a meaningful part of governance, to own a meaningful part of cash flow, not some leftovers, not the fucking scraps that these companies throw around. Now, clearly, you have some companies that their ass is against the wall and they're throwing around 10, 20, 30% dividends, but they're exposed to certain macroeconomic forces of the greater financial system, be it shipping and geopolitical complexity. I would argue that regulation of these financial products and services in the crypto space carry less risk than these shipping companies throwing around 20, 30%. The geopolitical complexity of shipping compared to regulation, and the regulation isn't even really like they're going to stop or interfere with business because these protocols are decentralized with regard to contracts being immutable. They're not enforceable. And then the user interfaces are hosted on IPFS so that you can't even enforce on the user interface. And even if there is something done from the user interface level, you could just literally copy it and run it locally because you're ultimately just interacting with the contracts. So there is the most opportunity I could possibly think of in the crypto space. You know, that's what I think all day long. I'm like, where's the opportunity? And I don't see it in traditional corporations. I don't see it at all. And I'm quite fond of Raul, no matter what folks on Twitter say. And I like his the exponential age. It's spot on. And I don't need anyone to either like or dislike it. It's for me to like or dislike. And I like that narrative, and it is completely valid. Things are valid until invalidated, but that narrative is completely valid thus far. And check back in 10 years. But you can't check back in 10 years because there's things that need to be done between now and then. You need to assess, you need to digest, you need to be quantitative and use analytics and the metrics and the data to pivot, bop, and weave and be the skier that goes down the moguls, not flipping, but bopping and weaving down the moguls. You need to be the surfer that's surfing the waves and not tumbling. So we're here to surf. We're here to ski moguls. Kaizen's in the house. Danny, good morning. Liv, hey Noah, how's it going? I'm okay. I'm hungry. I got to go eat something. Eros, good morning, Noah. Hope you're well. I'm okay. Hazim, hey Noah, can you explain M2SL? Yeah, M2SL is money stock. So this is denominated in M2, money supply. Now it offers a different perspective as compared to dollar denominated, because this is dollar denominated that's rebate or based with or denominated in total M2 supply. So it gives you a different perspective on the charts. Look, this is Bitcoin, and right now it's hovering around 2020, 2018 all-time high, bouncing off the 200 SMA. So what's fascinating is the perspective on the dollar. You're looking at technicals, you're looking at trends, whereas this is looking at actual moving averages that happen to manifest on this chart. This, I think, is the most meaningful presentation of where the hell we are. It bounced off the 200 SMA and it's depreciating. Look, it might fall down, but look where it's been. It's been riding the 200 SMA for years, 6 years. The whole time it's riding the 200 SMA. And look, in 2020, when we had our liquidity event, it pushed down below. And that was and then you had your mean regression. Mean regressions were run both ways, to the downside and to the upside, and it reverted back up through the 200 SMA. So this is a great trend that has been very effective at describing the directionality of Bitcoin over the many years. That's meaningful. You could zoom into earlier years, but I would say the most previous cycle is the only one that's really comparable. And this is all irrational exuberance. So if you literally block out everything above this line, it's a heck of a trend. If you bought at 3,000 and you're at whatever the hell it is now, that's a fucking the 200 SMA on the weekly. This is a heck of a trend line. You're doing very well. So this is what I would describe as peering through the madness. This is bullshit. This was bullshit. It means nothing. Where are we compared to where we were, and how is the trend looking? The trend is directionally upward. It's a beautiful chart. You just need to completely avoid this bullshit because the general public really does not understand how to manage money and they cause all this complete insanity. Now, if you just focus on this trend, it's a heck of a trend. It took let's see. Nope, that's the 10-year. And this is probably ES. It took 13 years. Nope, nope, date range, date range. Oh, come on. Sorry, you guys see this. Let me express this idea. It took 6,000 days. 6,000 days for NASDAQ to get back to where it was. 6,000 days. And then you go over to Bitcoin, 6,000, all right? It took 1,000 days. And it was even less because we had our irrational exuberance. It took 1,106 days. That is what I would say is the most meaningful to get out of these. Most meaningful thing to get out of what the hell is going on in the crypto space. This is equity, 6,000 days for a period of shit markets to get back to where it was, and it took Bitcoin 1/6, 1,100 days compared to 6,024 days. That's the perspective. That is what's meaningful that I see in the chart data. Hope that helps. 0x Lude. Hey, Cap, in hindsight, would you lock your VE tokens again or take capital gains and wait it out in stables? I would lock my VE tokens and I plan to have more. The odds are I'll be converting my CVX into raw VECRV. That is where my gut is telling me right now. So I got probably about a month. I got 2 unlocks, one next month in a month, and so I have 1 month and then 2 months, and I'll be probably just moving everything over to VECRV. Um, Based on what I see in the charts and the data and the capital flow, it's one of the most meaningful pieces of infrastructure in the crypto space, and this really comes down to federation. And if Frax does what they're proposing to governance, holy shit! It's got literally dollar vibes written all over it from a federation standpoint. And if you're going to take a bet, to me, that I'm going to hang my head on that shit. That is wild from a philosophical standpoint. What it's doing in technological form as compared to what has been done historically in sovereign form. That's crazy. That's really deep stuff from a philosophical perspective. Loki, you're very welcome. The big twat. Hey, Noah. Thoughts on recent divergence of price action between NASDAQ and crypto? Crypto front runs equities. That is generally my opinion. Dan, just joining. Hey, Dan, how are you? I hope everything's okay. Rough times, I know, my friend. Not sure if you mentioned this already. Apologies if you did. Have you been DCAing Curve or anything else? No. Pure cash, 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 cash. I've been playing around with crypto debit cards and managing cash flow and managing accounts and figuring out how to do accounting, and I'm prepping for next cycle. So that's the biggest thing with the trust and corporations. Play around with that stuff. That's probably the best thing to do with time right now. Um, I'll probably be I said what I'm going to do with the CVX when they unlock. And that's it. I love looking at the metrics for Curve. It is what it is. A maximalist is either born out of irrationality or out of quantitative analysis. And this is just pure quantitative. There's nothing else but this. This is the biggest emergence there is that from an opportunity perspective. I mean, obviously, Uniswap's doing multiples in volume. 1inch is doing about the same volume as Curve. But there's zero opportunity with those organizations. They give you nothing. But this, maybe 565 in the VECRVP ratio, that's crazy. There's revenue. It's a productive business. It's a real business. This is the greatest opportunity in the crypto space. It just is. And Frax is as well. Frax has been hammered in price point, but the peg is that they own the liquidity. They own it, meaning the peg will survive, which means lindiness will build, which means the next cycle is going to be a different perspective, how it starts, because it comes from a previous cycle. Now, I have my eye on two protocols, Bancor and Catalog, which I've been saying for a while now, but there's no opportunities there. Bancor does not have has breathtaking, brilliant tokenomics, but it's missing the curve factor. Now, if Bancor issued gauge weight voting, that would be profound, and then people could bribe, and protocols could bribe to adjust the weights of the gauges. That's the biggest emergence. It's called bribing, but really what it is incentivized voting. What's the commoditization of voting, where Tetranode hit the nail on the head with looking at it from a VC business perspective. How much money does a company, a protocol, need to raise in order to enter the crypto space? You need liquidity, otherwise you got nothing. So you need a certain amount of curve, or you need a certain amount of money to spend on voting to bribe the votes. And that's how you get a protocol online. So he's looking at it from a business perspective, and he's spot on. I don't, I remember when we talked about whether it was he opted for convex. He made multiples. He did very well getting out at 60. Jesus Christ. But that's besides the point. He leaned towards convex to being where things land, and that's what I think about. And I happen to lean towards curve. I was thinking of CVXCRV at the time as the cash flow machine, but now convex is a critical component, and they help curve get off the ground and stabilize the monetary policy. And believe me, convex will do just fine in the upcoming cycles, especially as the emissions dwindle. We're still at the point where it's uncertain how things will play out in the coming years, but I'm starting to have my gut starting to tell me a little bit more to just base VECRV was always the opportunity all this time since 2020. What they built, what the federation that has emerged, and if Frax issues FXSCRV, I mean, it's just getting crazy. And MIM and Abracadabra is not off the table. Abracadabra, with their brand update and their magic curve, Danny's got something, and it's something big. It's a CDP, and it's something big. Now, bear in mind, I've talked recently about something big from a technology standpoint being an independent evaluation from a potential opportunity to own Spell. I'm not buying into Spell. I'm not buying it. I'm not exposing to these markets. There's nothing I'm doing with regard to purchasing. If anything, selling. I sell my yield, so I have my revenue. I have my income. I have my debit cards. I can pay bills. I'm not buying any assets. This shit is going to get all hammered. And even if it doesn't, I don't care because I don't want the risk of getting hammered. But my point was independent is the technology, and I think this is something big. So don't misconstrue my excitement for a technology for a potential investment opportunity, especially right now. But I think this is something big. I think MakerDAO is something big. I think QiDAO is something big. And I think they overwhelmingly survive. That doesn't mean I'm buying anything. Please, please, guys, don't fuck up your money. Seriously, me saying something is big is different than doing anything with money. Taps, he's in the house. Keep up the good work. Dan, can you please explain the new Frax proposal? Yeah, well, it's basically what I described briefly. Frax is a stablecoin and Curve is a stablecoin machine. it facilitates the stablecoin. So if they intertwine their monetary policies and Curve becomes just someone who's just sucking Curve out of supply and they're locking emissions, it's just synergy. And it becomes a major pillar of the federation because, as Tetrano talks about, you need X amount of Curve or money spent on incentivized voting to bring a protocol online because you need the liquidity, and Curve is the facilitator of liquidity. So the Frax and Curve proposal by Sam just further solidifies the power of the Federation. And what Tetrano talked about was an entrance fee. The VCs need to raise capital to pay for the entrance fee into the Federation. The Federation facilitates survivability, really protocol functionality. It allows a business to actually operate, which contributes to survivability. So that's what's happening with really the Curve Federation. It's creating a network of synergy. And that's what the dollar is. Why do you think countries hold it in reserves? Because people, you could pay for goods and services in dollars around the world, and you could borrow in dollar-denominated debt. It's a federation, which being part of allows a country a better opportunity to survive this disinflationary global currency system. Hope that helps. Do you think in a few years Bitcoin, DeFi, Badger, and others will take off? Yeah, I'm still interested in Citadel. I'm still tempted. Still tempted. We'll see what happens. So, Citadel, Bancor, and Catalog. That's I'm intrigued about, and I'm also intrigued about the alternate disintermediated and permissionless lending protocols. I forget that protocol I was looking at the other day, but it's kind of like Aave, but it's not. I think there's going to be a lot of protocols that come online next cycle that are businesses that'll be very much tied to like very public facing rather than crypto centric for lending and borrowing. There's a Tellor Finance, Tellor, uh, under collateralized lending. It's going to be a whole industry with a lot of enterprise. Um, Dennis is in the house listening to you while driving to work to make some money so I can buy crypto in the bear market. Just be cautious and thank you for joining. Uh, Pizza Trine? Got that wrong. Sir, do you follow Ethereum BTC chart? If so, could you comment? Yeah, I looked at it just now. So it took 6,000 days. 6,000 days for NASDAQ to come back from the dot-com crash. And it took Bitcoin one 1,106 days. And denominated M2 money supply Bitcoin is hovering around all-time high 2018. I don't like Bitcoin as an investment. You know what I do like? I like Syscoin and Rootstock, Bitcoin EVM L2s. So it's going to be very interesting how the EVM L2s shape up in the coming cycles. There'll all be a lot of synergy. I don't know about competition, but we'll see how that plays out. But I'm very interested in doing what we do, like Curve, and just capital formation, capital flow, money velocity, but instead of secured by speculatively Ethereum POS, Bitcoin, um, so POW. So that is very interesting. How that? I mean, Syscoin's been around a long time, and Rootstock. We'll see if they grow some legs. I mean, we'll see if Syscoin grows some legs too. But they got Pegasus, so I mean, and you could use multi-chain to get onto Syscoin to go into Pegasus. You realize this? This is obviously a Uniswap v2 fork, but this is on Syscoin, which is secured by Bitcoin. This is Bitcoin. This is Bitcoin DeFi, DAI, BNB, USDC. Okay, so very interesting where all of this is heading in the coming years. But that's the time frame to keep in mind. Coming years. Um, when bottom? I got no idea. What bottom is when either the Fed capitulates or something happens with regard to liquidity because liquidity is draining from capital markets, equity markets, and crypto alike. You also mentioned a stream a while ago that you like to stay away from projects that Tetra is invested in. Why is that? Oh, he's a capitalist. Oh, that boy will take money if he has it on the table. If he has an opportunity to sell something and just make a gain, he's gonna. So there's big risk, and that's the same with any whale, and that's the same that you would do if you had 50 mil in a protocol and you could capitalize. It does a 25% rip to the upside, and you could capitalize $5-10 million. Anyone's going to capitalize. You would do it. You would. So that's what he does. He's a whale. So I don't want to play the whale games because I understand them. So I tend to avoid the protocols that he has large allocations to. I'll use them and I'll appreciate them. And if there's an opportunity, I will allocate. But the opportunity must outweigh the risk of his desire to capitalize. And this is the same with any protocol. It, before allocating to any protocol, you got to understand VC and seed investors and early rounds, OTC deals, so on and so forth. Mohammed's in the house. Barry, hello. Johannes, freedom hacking, my man. Thank you for streaming. It's a pleasure in this wild market. Abracadabra boy. I think Ethereum higher in 5 years than now. Yeah, it would be awkward if it's not. If Ethereum and Bitcoin are not higher in 5 years than now, you're talking about macro financials. That means we have a great deflation, which means the vast majority of zombie companies out there are gone. It means many countries around the world, their currencies fail, and the IMF is going to be doing some wild shit. So these assets, crypto and Bitcoin, are intimately tied to the state of macro financials, um, and it's really like what Jeff Snyder talks about, disinflation. Um, if disinflation becomes deflationary, you're going to see countries fail. So in order for that not to happen, they need to inflate. And inflation isn't a bad thing. It's grossly misunderstood. I talk about debt, and debt servicing is nominal, so there's no inflation in debt servicing. The amount you owe on a monthly basis is the same on a fixed rate debt, and the burden is placed on the lender, not the debtor. So that is what sustains the directionality of our well the existence of our current system. Is they're going to have to reinflate global currency at some point, or it's going to deflate, and deflation is going to be painful. And it will likely lead to significant social unrest, the collapse of supply chains to a greater extent, and that's going to cause people to riot. It's going to get wild. We'll see how long this period of austerity will last before government capitulates. I think if you start seeing food riots in the U.S., we won't have capitulation too far away. Um, Jake, how do you think regulation affects DeFi landscape? Protocols can legally dish out dividends on cash flow. I mean, legally or illegally, it's irrelevant because it's disintermediated and decentralized. There's nothing they could do about certain protocols dishing out cash flow, dividends on cash flow. We already have it. That's the whole core of DeFi is cash flow positive businesses offering disintermediated access to the cash flow. So whether that's regulated or not, I mean, certain protocols, they're not going to do anything. The contracts are live. The contracts are doing what they do. So there's no way to regulate certain contracts. But I think once there's regulation, you're going to see enterprise, you can see the corporations start to set up shop, and you're going to literally have just regular businesses. And maybe it'll be modeled after equities and traditional dividend registrations and stocks registrations with the SEC. Whatever it is, the next couple of years are going to be freaking wild in an exciting way. Hey, Cap, what's your favorite project at the moment with good tokenomics? Curve? Pre-sale, and I hope that helps. This doesn't mean buy it. It doesn't mean buy anything. I wouldn't buy shit right now. Um, and that's what I said earlier. There's nothing to buy right now. You need cash. And play with some debit cards and figure out cash flow and balance your balance sheet. You cannot spend more than you make. You need to save. It means you need to have growing capital. Now, clearly, saving doesn't get you anywhere, but it's just healthy to not spend more than you make. You need to spend less money than you make. That is the way it must be. Just buying BTC whenever I get money. Well, it's DCA. That's cool. Um, that's always good. Now, DCA for smaller accounts is a solid methodology. If you're DCAing Bitcoin, you're basically tying your savings to the desire of status quo central banks to keep the system operating over multi-year time horizons. And to do that, they need to inflate. Otherwise, there's deflation, which will destroy other countries. And if they keep raising rates, foreign fiat's gone. It's just going to evaporate into nothing, and everything will pile into the dollars because everything else goes to shit faster than the dollar. The dollar is going to shit, but if everything else is going to shit faster than the dollar, people are going to sell their currency for dollars, and that's why the DXY does what it does in the charts. So DCA Bitcoin's always good. I don't DCA Bitcoin because I could outperform the crap out of it, and I that's just what it is. So, but DCA is a good technique. Maybe even a little further on the risk curve is DCAing Ethereum. Dollar cost average is generally a good practice from a savings perspective. It's a different mentality. I'm more of an investor. So I wait for periods of outperformance. And right now, this is not a period of outperformance. Like if you were going to, over the next year, if you're going to take 10 grand, save 10 grand, 15 grand in Bitcoin, if you took that 10, 15 grand in a period of irrational exuberance where they're juicing the economy and these markets are going apeshit crazy, that 15 grand turns into 150 grand, 300, 450, a million, 1.5 million. You get 100x on the money. It's not too it's out of the risk curve, and it also requires, what's really required to get that kind of performance is it's a combination of luck, but if you've done it, you have a gut instinct how to do it. So what they say, money does make money because you know how to do it. So DCA works, and that was a bit of a digression. Sorry, guys. What's up, champ? Hey, Rupert's in the house. One curious view. Did you catch Doctor Strange? Yeah, man, that shit was crazy. Woo! I'm a Marvel guy. Um, that was really good. What's coming out? Thor: Love and Thunder. That's going to be wild. I absolutely love those Marvel movies. I'm a big kid, boys. I'm a big kid. You guys if I ever grow up, call me out. Say, Noah, what the heck you doing? There's no growing up in this business. I'm going to wrap it up, boys and girls. Friday, May 27th at 12:19 p.m. As always, I thank everyone for joining me. I understand the markets are hitting everyone hard. I know I've seen the unsubscribes on Discord. Listen, you guys got to unsubscribe. I know it is what it is. It's all good, but in of all times in these types of markets, it's imperative to have a rational sounding board, and that is the most rational community in the entire crypto space. So I greatly appreciate everyone and anyone that stays and contributes a voice of rationality, because it's not just for yourself, because your words have meaning and it helps everyone collectively. It's a federation. It's a group. As always, tell everyone to subscribe. After party on Discord. If anyone needs me, I'm available. NoahSimon.com. Ping me on Twitter. I'm more than happy to help. You don't have to pay. Ping me on Twitter. Say what's up. At me on Twitter. I won't see you guys on Monday. It's Memorial Day. So I wish you all a wonderful weekend, and I'll catch you guys next week on Wednesday. Peace.